Welcome to the Royal Tax Podcast with your hosts, Megan Templeton, Royal Legal Solutions Consulting Attorney, and Royal Legal Solutions CPA, MBA, and CFO, Pete Schindele. Each week, they talk about how to take your tax and financial strategy to the next level and learn how to build and scale your real estate investing business in a way that maximizes your returns and minimizes your taxes. This is for informational use only. For direct questions, please contact us or your local tax CPA accountant.
My name is Pete Schindele. I'm the in-house CPA for Royal Legal Solutions. I'm also the CFO, and you probably recognize me as Scott's sidekick on the previous meetings. Unfortunately, today there's no Scott, so it's just me, and kind of be on the accounting end. It might be on the drier side, but it'll still be informational. So as I stated earlier, we're going to kind of recap solo 401ks and then give a few examples of individuals that have a solo 401k as a corporation or as an LLC sole proprietor. So as we've all kind of discussed earlier this year, a solo 401k is a really good way to defer your taxes. Anyone can start a solo 401k if they have kind of their own income and business. As you're aware, you're able to put up to about, I'll go to the next slide here. The sole 401k contributions are based off of net income from self-employment. So in essence, that self-employment income would be a W-2 wage from your S Corp, or if you're just an LLC or sole proprietor tax an LLC, it would be your net income from your Schedule C. So the amount of money you made in your business. For 2021, you could do $58,000 in total. Or if you were over 50, you can contribute an extra $6,500 to be $64,500. For 2022, they did increase the limit by $1,000 to be a total of, well, they increased it on the employee portion $1,000 and then the employer portion another $2,000. So total for 2022, you'll be able to do $61,000. If you're over 50, you'll be able to contribute $67,500. Again, this will all depend on your wage of W-2 or your profits in the company, but those would be the maximum amounts that you're allowed. So if you do decide to max out your solo 401k, you're probably in around a 30% tax bracket. So you could just see that as contributing that $61,000 is probably going to save you around $18,000 in taxes, just doing a quick math. But again, it's all going to depend on your actual income at the year end. So there's kind of four types of contributions you can do in a solo 401k. The employee contribution. So that's where if you're a W-2 wage from an S Corp, you would put in part of your wages from there. Last time that was around $19,500 in 21. This year it will be $20,500. And then you have your employer contribution, and that's where you can contribute your profits depending on your W-2 wage or your profits in general to get up to that 61,000. So those two combined are what gets to that 61,000 number. You can also, as an employee, you can contribute those contributions as a Roth. But if you do that election, you're not going to get the tax benefit on the employee contributions because those are with after-tax dollars. So one could choose to do a Roth contribution. You won't save tax dollars in today's dollars, but when you withdraw those amounts later on in retirement, those will be earned as tax-deferred and tax-free. So that's just kind of a discussion that we'd want to discuss if you decide to do a 401k, which route you want to go. And then you can also put after-tax dollars in as well, voluntarily, as part of that employee portion of that contribution. So what this screen is, just kind of shows you what you can do as an employee. When you set up your solo 401k and you get the legal documentation, you'll see elective deferral. In simple terms, that's the employee contribution. So if you are self-employed, you have a sole proprietor or an S Corp, you can contribute up to that $20,500. If you have a day job as well, though, and you do participate in your day job's 401k and you donate dollars or contribute dollars to your 401k at work or your Roth 401k at work, that will lower the amount you're able to contribute. So we have an example here later on. The other essence is the other part of that big contribution limit that we showed a couple slides ago is the profit share. So again, if your business is a corporation, the way we calculate the employer contribution portion is it's really simple. It's your W-2 wage times 25% of times 25%, and that's what we're able to contribute from an employee corp from the profit share for an S corp. Again, that is limited to that 61,000 though. So if you paid yourself 200K, 25% of that would be 50,000, but you couldn't do the whole 50,000 because the max you can do is that 61,000 minus the 20,500. So the max you could really do at that point is a 40,500. So that's where we really want to do an analysis to how much your W-2 wage you want to do from an S corp to get that maximum amount if you want the max amount.
Want more information? Join our community groups that exist to provide a space for like-minded people on a similar journey to learn, share, and network with real estate investing professionals and entrepreneurs. We meet weekly for an hour in Zoom to offer knowledge and accountability. Be sure to grab the link in our show notes.
As a sole proprietor, one of the simplest ways to do it is just take your net income and times it 20%. That will get you pretty close into the ballpark of what the profit share amount can be from a sole proprietor or an LLC being taxed as a flow through, not as an S corp. And again, if that 20% would put you over that 40,000 number that I mentioned earlier, then it would be lower than the 20%. So it's kind of just a calculation we have to do. So here's an example that is of a sole proprietor. They have an LLC taxed as a flow through LLC, so that would hit their Schedule C. It's not as an S corp. They're younger than 50 and they had $100,000 in business profit. So in this scenario, this individual could contribute to their sole 401k $39,000. That contribution is really made up of the employee contribution of $20,500. And then this is that profit share of the employer contribution. So you may say, oh, 20% times 100 should be 20,000, and this number is at 20,000. And the reason is for the sole proprietors, you have to deduct 1/2 of your self-employment. So really what we're taking is 100,000 minus the 7,000 times 20% gives you that 18.5. So I know I'm throwing a lot of numbers there at you, but in essence, this individual, if he decided to max out his sole 401k because he wants the pre-tax savings of about $12,000, but he wants it in the sole 401k where he can invest in real estate if he chooses to, because with sole 401ks, you can invest in a lot more items than you can a traditional 401k or IRA. So on this next example, it's pretty much the same base pattern as before. You know, younger than 50, has business profits from his side business, but he also has a W-2 job. And in his W-2 job, that person contributes $5,000 to their 401k. So what happens there is they're only able to contribute $34,000 to their sole 401k, lowered their employee contribution. In the previous slide, you see here it's 20. And this slide, it's 15,000. So again, you can have a sole 401k if you have a day job, but it could just limit your employee contribution. So it doesn't exclude anyone. And again, also, if you're a married couple, you both can have a sole 401k, and you can correctly plan to max out that 61,000 for both spouse and yourself. So That's where the big tax savings get involved, is when you both have a solo 401k. Excuse me. This final example is of a corporation. So most likely it's an LLC taxed as an S Corp. That's most of the ones I've seen. So in this situation, the person's younger than 50, has 100,000 in W-2 wages. So this individual, they're allowed to contribute 45,000 to their sole 401k. So they'd max out the employee contribution, and then the employer contribution is 25% of his wage. So this one's a lot more simpler to calculate than a sole proprietor. And again, if someone were over 50, you could add another 6,500 to this employee contribution part. So I've thrown a lot of numbers and information out very quickly, but luckily I'm leaving us a lot of time to ask questions and kind of go over this material in a little more detail. I'm going to stop sharing my screen and we'll go back to the visual thing. And if you have questions, let me know and we'll unmute you.
Thank you for listening to the show today. If you're feeling overwhelmed with taxes as they relate to your real estate business and investments, or you're unsure if you're doing your accounting correctly, fill out our 5-minute quiz. With the information from this quiz, you'll schedule a meeting with a Royal Legal Solutions advisor who will provide you with powerful tax-saving strategies on your first call. Go to www.royallegalsolutions.com/tax to fill it out.